The S&P 500 Nasdaq 100 as we're discussing here on the day. Now, when we look at the action, I'll start with SPY. We can see we're coming right back in to our January highs of this year, where we ultimately rejected, pulled back basically into March, the banking crisis, and eventually broke above, which is around that 4,200 ES level. Now, we zoom into the action on the day. Okay, so what happened? Now, I'm going to go into some Twitter stuff, but let's just see, intraday action. Obviously, Friday, we end at lows. We end below the 200 SMA, this yellow line right here. We'll talk about that 200 daily moving average. We press down into that 418 level, a little bit lower, and then bounce right back above. Now, also, too, another level I want y'all to keep in mind, going to the 15-minute chart. This was our lows from October 3rd. So our first pullback until we pushed back basically into that 438 level and came back down. Okay, so I want you to keep those in the back of your mind. Okay. Now, if you watched our live stream here, and every day we're live 10:30 a.m. Central, basically the trade was, if you wanted to I don't want to say force a trade, but had to force a trade. If you wanted that opportunity, you're going long off the 200 SMA, right below local lows right there. And then your local target was around 124.5, which came in a little bit lower than that, but it also had our massive chart prime level as well. And you can kind of see what happened. So chart prime also designated after we broke above that, we have a buy level here where support is now. And so we end the day back below the 200 SMA and back at that range, which again was the low from October 3rd. Pretty to the dot too, right? Not too much to discuss there. Now we zoom back out really quick. We go to the daily, we go to Nasdaq, and I'm giving you a quick visual before I'm going somewhere, right? You're pushing back down here on Nasdaq right to the 14.6 level. We break below, almost get to our next major level, but bounce right back into this range. Ultimately, we're holding 14.6. Now, this has been the overall trend so far, just so you can kind of see and get a clear picture. Lower highs are being established here, and we're pushing down, making lower lows as well. Not ideal behavior. Now, I think we're, Kaka can hit the fan, is breaking below the 200 SMA on the daily on the Nasdaq. Okay, so those are things that I'm looking at right now in particular. And again, if you don't follow us on Twitter, I recommend doing so, because as you can see here on Twitter, this was this morning at I believe what time, 8:34, 4 minutes in market open. I edited it, so it was a little bit before, but as you can see here, big test of 18.5 coming, Nasdaq testing 14.6. It did bounce overnight, which was weird. Oil was an issue. DXY was an issue. Those keep weakening. Big tech earnings. Be safe, not aggressive. Okay. So what happens? We hit those levels almost to a T. We bounce off of them, and we're kind of living to fight another day. But of course, before we go into that content, I ask you to do two things. Consider liking and subscribing. It helps out tons. And if again, we're here every single day, so you guys are prepared. Also, too, the Discord link is down below if you are interested. I never want to push anyone to subscribing to that. It is not a signal service. It's showing you what we're trading, how we're trading, and ideas throughout the day as well. But ultimately, the goal is to teach you how to trade on your own, so you don't ultimately need us. If you're not willing to put in the work, then I really recommend not joining Discord. We also have a lot of free education on our site. You go over here to home, hover over that, go to education. All of this is free game for you guys. Education, everything. We're writing new articles almost every day or every week. Let me tell you that right there. And then also Twitter, like I said, giving you charts, etc., and watch lists and things along those lines. Make sure you're always prepared. But that also brings me into some of these things happening here on my chart and key. And before we go any further, I want to give a special shout out to the sponsor of this video and a new sponsor of the channel, Chart Prime. But what if I could tell you now we have something in a tool that's going to be able to give you all of our key levels, or a little bit of a cheat sheet going into these as well. And then also breaking down massive levels you need to be watching for buyers and sellers in between the charts. Or what if you can also go into your chart, quickly identify the patterns that are there, whether it be broadening wedges, head and shoulders, double tops, or anything along those lines. And one thing that you guys know is that I'm never going to stand behind a product that I wouldn't use myself. That's why every single day I am officially going to be using Chart Prime and these specific indicators to help us on the live streams and in the daily videos to make charting quicker, faster, and of course giving us advantage to see things that we may have missed that AI will no longer be missing. And this is just one chart. If you're interested, the link will be down below, and if you use our code, you'll get 30% off every single month. Make sure you check them out. And if you have questions, feel free to comment down below. Let's get back to the video. Now, as we jump back into the charts, I do want to say one thing, and one thing you need to be paying attention to is earnings. So tomorrow after close, we have Microsoft and we have Alphabet. Those are going to be big boys. And also Snapchat plays a little bit of a role into kind of Facebook and social media plays there. And then going obviously into Wednesday morning, you have Boeing. So really tomorrow afternoon, you're looking for Microsoft, Apple, Boeing in the morning. Going into Wednesday, you have Meta. Thursday, Amazon. Now, what I will say, the weird thing that's happening here, the one weird behavior thing that's happening here is that Apple's not reporting the same day as Amazon. We know those typically report together. Apple reports next week, which leads me into a theory that I want to talk about here inside the video today. But we're going to jump into that here in a sec. But what I will say is let's go over some of these names here. Microsoft, Alphabet, and what's happening there. And I want to prove a point here. So one, we're at a major support. Okay, we're at a clear major support right here, 14.6. Okay. Go into ES, what's happening here, right? Jumping back into ES. I don't know why that did that. ES, as you can see, we're back down at these local lows, but we're holding up, okay? SPY sitting basically, I mean, they did reject. That's a nasty daily candle. You rejected right off of the 200 SMA. That's nasty, okay? But you're still holding those local lows, trying to at least, okay? Now, when we look at these names, you're going to get a weird viewpoint, and I think you should feel kind of weird about how we're moving here. So what I want to do first is I want to show you weak names, okay? Like Apple. I said Apple below 174, obviously one of the weakest names out there. So what happens? You break below 174 on Friday. Below that, I mean, you're basically shorting it back down. You hit the 200 MA to the T, but if Apple breaks the 200 SMA, I mean, that thing has a lot of downside potential. You know, our chart prime level, our next major level is down at 157. I mean, you probably have a little bit more support into like 164, but that's where your big level is coming to after that, okay? So just showing you a visual, like Apple back down damn near September lows, right? Tesla, you know, you broke down past September lows, okay? Please, I'm going somewhere. But then we look, and like Amazon also, you broke down back to basically September lows, got a good bounce throughout the day. But when we come back in here, okay, and sorry, October lows, you broke past September lows. When we come back in here and we look at something like Microsoft sitting at local highs. I mean, granted, you're not at 338. Okay, you're not, but you're bull flagging here. You look decent, like you want to get continuation. You're sitting at basically 330. Okay. Meta. Yeah, you're a little bit lower from those highs. You made 52-week highs basically, 10 days ago. But I mean, you're looking really good on Meta, right? You're basically mounting of you're at local highs. September lows, August lows are way down here at 275. Much lower, right? So relative, I think this is a strong name. Okay. Google, about to report. Again, see those September lows, 127, we're basically at highs. Now, the thing that you need to be identifying here, and this is what everyone talks about or we kind of get lost, right, is we look at something like SPY, and SPY is at lows, right? You broke local lows in October. You broke September lows. This is bad. So in theory, when we look at this, and same thing with NQ, you're at lows. In theory, you would expect, right? We would expect stocks to, that are heavy in SPY, heavy in Nasdaq, to be pushing back down to local lows. But not all of them are. Only a handful of those names are. Like NVIDIA, another great example, right? Everyone's been talking about the head and shoulders that's maybe playing out here. But again, you can only go short once you break below that neckline and then hopefully get a retest and break back down. You don't go short before then because today could happen to you. You hit lows of 409 and bounce back up to 430, right? Could be trapping a lot of individuals, okay? But the point is this. It's just a handful of names. A lot of these companies still look strong. Now, that's not me saying that the market's going to rip or go insane. That's me warning of caution. Because when I look at this earnings calendar, when I look at how this could play out, and again, next week, I think it's this November 2nd is Apple's earnings. That's when you have Apple. And I'm going to tell you right now, I think Apple misses by a long shot. I was a believer when Apple was doing, again, long-term, I think they're a great company. A fantastic company long-term. But I'm going to tell you right now, 100% right now, I personally believe Apple's earnings are going to be terrible. iPhone 15 has been lackluster. You had all those overheating issues, so the release was terrible. You have the China news continuing to push iPhone sales down the toilet. They already said they expect Mac and iPad sales to continue on a downtrend, right? I don't think services can hold this up for as long as we kind of think they will. Again, this is a personal opinion, what I'm looking at, and I'm just playing the cards here. But when I look at this board here, these are probably the best performing names out there. Minus Amazon, again, what are we looking at here? What's the common denominator between Apple, Google, and Meta? They're not selling a physical product. So they're not necessarily selling directly to me and you, the consumer. We know the consumer is weakening, but we also know the consumer is still spending like crazy. So they're kind of at this area to where they have a little bit of defense against them. Because what do we know right now? advertisers got to keep spending for Google and Meta. They got to, right? With Microsoft, the cloud space has never been bigger with what's happening with AI. So Azure just keeps growing and growing and Azure, whatever, keeps growing and growing and growing. Amazon as well, the cloud sector, dominating in AWS. But not only in that, and again, we're going to holiday season, right? And maybe I'm beating a dead horse here, but we look at this, Amazon continues to perform with sales. They had their best sales day of all time last quarter, right? So these are areas I think we have to be able to acknowledge. And when I look at these names, I think these are probably the best performers or best names that could perform for earnings season. And I think next week could really start on a downturn just looking at earnings names. Okay. And then not even to mention some of the fundamental news we have coming out with PCE and things along those lines. But that's what I'm looking at here. So again, I'm not trying to scare anyone. I'm not trying to make the market look more bullish than it is. I'm trying to point out factors that could really start playing into effect here. And not only on that, again, we have some good equities holding up, right? And we're sitting at major support, right? You have a major support down here, right? We look at SPY. Now, if SPY gets back up to the 200 SMA, I think you're cooking. If you hold that 200 SMA, I think you're cooking, okay? Nasdaq, you held 14.6. You could be cooking here, right? So again, these are all things, the Dow, we zoom out on Dow. Dow is performing really well. Better than the others. Just saying right here. You're still holding up still. We're still, not better than the others, but you're still holding up pretty well, right? We had those 3-4 day bad days, but still. We go to IWM. Now, IWM, what I will say, this is brutal. It's brutal. But IWM's at that territory again at the 164 level, 163-ish, where you either bounce or we wrap it up and we die to the end of the year, right? You break support at 162, 163, you're in bad territory. So the point here is, again, similar to what we said at Nasdaq, okay? When we're at 15.4, what did we say? Let me clarify. We said you don't go long at that level, right? This was our clear-cut resistance, 15.4. Go watch the tape on October 12th and 11th. I said it over and over. Okay. Same thing with ES. When you were at highs or the level you had to break above, I believe was 44.25, 44.27. Okay. We said don't go long until you mount that level. You get above it, you start mounting 44.30, 44.30 or 40, go long. It's all clear heads from there. But until then, you're at a major risk level. So when we look at what's happening, when we look at this performance, it's the same thing, but except now you're at lows. Now you don't go short, right? You don't go long at the highs. You don't go short until we get confirmation of a break, especially when we look at the data, especially when we look at what's happening on the horizon here and how big this week really could be. Because I'm telling you right now, Microsoft comes out. We've seen this story before. It comes out, it beats, this carries the entire market. Same with Google, right? Meta, we've seen this story play out. We've seen it with Amazon. We've seen Apple miss terribly, but Amazon hold the entire market up. Rewinded, I think it was 2021 maybe, of Apple and Amazon earnings, right? Same story. So I just encourage people, pay attention to what's out here right now, especially when we look at the levels. There is no reason to be going overly short here. There's caution, 100%. I believe in caution. I believe in not maybe holding too many longs here, right? And if you're positioning yourself long, have a hedge so you can get out of that position quick if you need to. But at the end of the day here, these are areas to where I look at the market, and again, you start seeing what our famous words here. We start seeing opportunity playing out here. And I can't help but when everyone's freaking out and panicking and Black Monday, this and that, to say, what if earnings perform? What if these companies show strength? What if? Now, again, there's what's happening in the Middle East. There's the scary idea of getting involved with that, okay? But again, we can't predict what's going to happen there. If that's going to happen, it's just going to happen overnight. We're not going to know anything about it. It's just going to happen. That's the reality of the situation. So, okay, that's what I'm going to leave you with there. Now, the next and final thing I want to talk about here is the dollar, okay? The dollar, also one of the more interesting things here on the day. I want to go to the 2 hour, but I'll go to the daily here in a sec. So basically, if you don't know, I should just go to the daily first. So the daily, you've been range trading between what levels? Okay, right? Your highs from March of this year, the banking crisis, and then your level right here, 107.2. ranging back and forth. Okay, we can see that you're clearly ranging. But today the dollar shows nothing but weakness, breaking through and pushing back into October 12th lows, which were highs on the Nasdaq and ES. Okay, dropping back down. You're getting, this is interesting here. We go to oil. Now, oil bounced again, very similar chart to the dollar, except you're seeing a little bit more strength here based on what's happening with Iran and et cetera, and them getting involved. If Iran gets involved, you have the idea that demand will rise on oil, right? Okay. So we look here, you know, oil, if oil, like it usually does, tracks the dollar, we could see oil start to fall through. Oil gets below $82. This puts a really good idea and a really good viewpoint on what's happening with inflation. Again, the common denominator here. So again, we look there. Now, again, I know some of you are going to have questions about the 10-year yield, the yields, this and that. Now, the 10-year yield did reach levels that we haven't seen, right? Since when? To 2007 today. Reached highs and immediately sold off. A little bit, not crazy. But yields are still very high. But the Fed said something very interesting about this. They said if yields stay here, they're doing part of our job for us. They're slowing the economy down. This is good news for us with what's happening with yields. It puts them in a situation to where they can pause. They don't have to continue raising. So again, this idea continues to circulate, right? If the economy is showing any weakness, right? Consumers are slowing down, but companies' earnings can continue to do well. This puts us in an area to where the market can continue. It can bounce. Possible bottom, right? These are just areas and things that we have to be viewing and identifying, okay? VIX today, right? VIX, you were broken out. We were pushing almost up to 24, the big level we like. You're trying to hold $20 right now. But again, we look at this story on VIX, and I say to myself, you know, VIX gets back below 20. I see the same story, easily pushing back down, right? So again, these are things that we're looking at. These are the concerns that I have of not jumping on this train of short, 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 sell, 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 especially with the reaction at the end of the day that we've had so far. Now, granted, I'll be the first one to tell you, the daily candle on SPY, it wasn't good. Very bad. Clear rejection off the 200 SMA. Buyers did not show up. IWM, not good. Losing a lot of supports, has to bounce or will die. Nasdaq, the best looking chart easily, right? If this was across the board what we look like, I'd be pretty bullish. I'd be hammering calls most likely. This is what you want to see here. But when we look at equities broad across the board, I'm not convinced that this is as concerning or daunting as some people believe, okay? But again, what does it come down to? Can the Nasdaq hold below 14.6? Number one. Can SPY continue to break down and hold below 200 SMA? Number two. And then ultimately, how do earnings perform? Which I cannot predict, right? I do believe if the names that look the best are these: Google, Amazon, Meta, Microsoft. I think those are the best looking earnings names. I do. I honestly do. Amazon is the riskiest one out of those. Microsoft, Google, Meta, they have a lot of hype around them. They have a lot of stuff that's going on with AI where they're expanding. And I think they could push a good narrative. If anyone could, I think they could, especially with what Netflix just did last week. That's my opinion. That's what I'm viewing. That's how I'm looking at this market. Not a lot of equities or stock picks that I'm talking about. But again, you're getting that opportunity. If I had to mention one equity that I'm liking, it's Apple. Apple gets back above 174. I think it's one of the easiest longs in the market, 110%. Over 174, I think you could easily start pushing back into that 180 range once again, especially with the higher low you're putting in here and the balance on the 200 SMA. I love it absolutely, but you got to get back above 174. That's what you're looking for there. That's my opinion. If you have questions, comment down below. I'll see you guys tomorrow. Have a good one.